Sorry. I didn't even realize that. Sorry. So I'm saying when you're doing a risk assessment, you need to identify risk in two categories. We have audit risk and then business risk. Under business risk, these are the types of business risk that you can actually be, the business can be exposed to. Number one, operational risk. Number two, financial risk. Number three, compliance risk. Number four, reputational risk. Those are business risks. So when you're doing risk assessment, you ask yourself, how is my client exposed in terms of operational risk? What can cause it? How can it be prevented? Number two, same to financial risk. So you need to know and understand the nature of business for you to be able to identify those kind of risks. You need to identify the nature of business. So then we have also reputational risk. And some of these are interrelated. For example, operational risk. When operations are affected, for example, obviously, you'll not make business, you'll not make money, and obviously, you'll actually have losses. So operational risk and financial risk are related. An example, the board is not clear. So I'm very sorry, Saul. We'll be working on that. That's something that I promised, that as soon as we get enough funds, we'll be able to get a good camera. The board is okay, the problem is the camera, I know. But we are still looking for money so that you can buy a camera. A good camera is 70 Gs, 70K. And we have to buy it so that we can give you good service. This is not what we expect to give you. We apologize. This is not our target. Our target is to be the perfect business provider or service provider. Sasa. So I write at the center, ziko sawa. Kando ndio inasumbua. That one also. Okay, sawa. So I'll write here only. So types of business risk. The business risk that we're talking about . The business risk that you're talking about, let me change the pen. Examples of business risk that we're talking about, number one, we talked about financial risk. Number two, we talked about operational risk. Number three, we talked about compliance risk. Number four, we talked about reputational risk. So we know you know the type of reputational risk that we are exposed to. Those ones you know. Just some echo. So let's proceed. So these are the risks that first you need to be able to identify. Then you analyze. You look at the effect, the causes and the effects and how they can be prevented. So when you're doing business analysis or risk assessment, you can be able to look into those ones. An example. Then we have here audit risk. We have here audit risk. So let's look at the types of audit risk that we have. In last year's sitting, in May, it was August sitting, sorry. August sitting, advanced level, audit advanced level, they were asked to give examples of audit risk. They were told to define audit risk and give examples or types of audit risk. So we have audit risk. Under audit risk, we have number one, inherent risk. We have control risk. And then we have reputational risk. Reputational risk. These are the types of risk that we have under audit risk. Now, control risk is basically the risk that comes under audit risk, for example. Audit risk is also called engagement risk, engagement risk. It is also called engagement risk. Audit risk is also called engagement risk. So what we are saying that these are the risks that the audit risk is the risk that auditor can give an inappropriate conclusion, inappropriate audit opinion. That is what is called audit risk. How is it inappropriate? It can give an audit opinion that the financial statements are okay. They represent true and fair view of the financial statement, while in real sense, they are materially misstated. The financial statements are materially misstated, but you're giving a conclusion that they are okay, they are true, they are fair. That is an audit risk. On the other hand, you can give a conclusion that the financial statements are misstated, where in real sense they are okay, they are very fine, but you're giving a conclusion that they are bad. So at the end of the day, it is still inappropriate report. It is still inappropriate report. So that is what we are basically saying here. So that is the audit risk. Now, what causes that kind of audit risk? These are the ones that causes or elements. They are elements or examples of audit risk. The first one is called inherent risk. The second one is control risk. And the third one, detection risk. This particular topic can never miss in exam. And be very keen, it can never miss in exam. So once you understand this topic, you already have almost 5 points or 10 ahead of others. You only need 50 to pass. So what are some of these risks? Control risk, what does that mean? It is the risk that the auditor is not able to give a correct report because of failure in internal control systems of the client. There is a problem in internal control system in the client business, and that problem has made the client give inappropriate report. He has given an inappropriate report because of the failure in internal control systems. So this one is called by failure in ICS. Failure in ICS. In this particular risk, the auditor will give a wrong report, but we come and blame internal control systems. That kind of misstatement or inappropriate report is caused by the failures in internal control system. Then we have another type of audit. The other one is called inherent risk. In some cases, you might find that there are risks that are beyond internal control system, such that we can't blame internal control system. An example is that assuming that you are the CEO of a company, you have very strong controls in place. But then over the weekend, one of your senior staffs or one of the directors have decided to go and misbehave. The director has gone out, misbehaved, and all the information is in the social media. What will happen? The following day on Monday, you'll realize that no client wants to come and operate and do business with you. The suppliers don't want to associate with you because of what? The reputational risk that has been caused by a client, by one of your staff who happened to misbehave over the weekend. not within the premises. So we are basically saying, in our premises, in our business, we have a lot of controls, and there was no problem. But then outside our control, even if you put strong control here, that is now beyond us. Unabeba mkono because it is beyond you. There are risks that we can still face because of factors that are beyond that. Those are risks that are called inherent risks. So you are saying inherent risks are risks caused by factors beyond internal control systems. There are factors beyond internal control systems where we can't complain, we can't blame internal control systems because they did fail. They are still there, but still we are exposed. So this particular issue, for example, if there was an issue, the auditor was able to audit financial statement. He gave a clean report that the going concern is okay. For example, he has assumed that the business can continue in operation. Then, in the middle, something happened that is inherent risk. The company unfortunately stopped operation or it ceases operation. The auditor couldn't see that. The auditor could not even realize that there's a problem. That is called inherent limitation. That one, the auditor has given a wrong report that the company is okay while it has a problem because of unforeseen risk, unforeseen risk, unforeseen risk that are beyond internal control. Beyond ICS. These are risks that the auditor could not even detect. They are beyond ICS. So, then we have detection risk. This is the risk that the auditor has failed to detect. The audit procedures that the auditor has applied has failed to detect some errors and fraud. And so he has given a wrong report because the audit procedures do not detect errors and fraud. So this is what we call detection risk. Failure by the auditor to apply appropriate audit procedures or relevant. So it has nothing to do with internal controls, but we blame the auditor because he has not applied the right controls to be able to prevent such kind of errors. So to detect, not prevent, but to detect those kind of errors. Okay, is there any question? Anybody who wants to call? So what was the question? How can we reduce audit risk? Yes, that is a nice question. Can you guys tell me how we can reduce it? How can we reduce it? Audit risk? You know, you can be sued. You can actually be sued if you give a wrong report. So as an auditor, you need to reduce the audit risk. By doing what? One of the things that we said during planning. During planning, you are trying to reduce audit risk by making the right audit procedures during planning. So you will reduce it during planning. Proper planning. Another one, any suggestion? Using the right procedures, thank you very much. Yes. How to reduce audit risk? Number one, proper planning. Number two, somebody has given me something, having strong ICS. No, audit risk on the side is on the side of the auditor. So internal control systems are actually on the side of the client. So as an auditor, how do you reduce from your side? You don't have anything to do with internal control system. It is the client who is supposed to come up with the internal controls, implement and ensure that they are strong. So from your side as an auditor, you are going to audit a client that has his own internal control systems. You cannot have anything to do with that. How can you reduce audit risk from your side as an auditor? So you're saying you need to have proper planning, audit planning. So another one, somebody has given me something here. Let me see. Using the right audit procedures, yes. Right audit procedures. Number three. Right audit procedures, number three. Gathering sufficient audit evidence, yes. Those are audit procedures. Sufficient audit evidence. Number two, review. Proper review. Number five, ensuring supervision or employing skilled people. Supervision. Employing skilled staffs. The next one is training. I hope you're writing this. You can reduce the audit risk by number one, training staffs properly. Number two, employing skilled staffs. Number three, supervision, review of the audit work, sufficient evidence during audit work, then the right audit procedures. Which one again? Can somebody try and give me another one? Another one? November 2019 question, November 2019 question 3D. November 2019 question 3D. They were asking, explain the term inherent risk, highlight factors that could result in inherent risk of a business. What are the factors that can lead to inherent risk of a business? Definition of inherent risk, we know. Let's look at the factors that can cause inherent risk in a business. Factors that can cause inherent risk in a business. Can somebody tell me a few? We know the nature of business. There are some businesses that are quite complicated. So the nature of business can cause that. Those are risks that are beyond internal control systems. Nature of business. You know, some complicated business. There are some complicated business that there are risks that can happen. They can be exposed to inherent risks, but you can't be able to identify those risks. Ways is due because the business itself is complicated. So you can't even put controls. And even if you put control, the risk can still happen that beats those controls, that are beyond those controls. The next one. These are risks that are beyond control, internal control system. So we are saying there are other factors that affect the whole industry as a whole. Example, competition. Whenever there is competition, sometimes people involved in some bad characters, they change to bad characters. For example, you can find that people want to manipulate figures to show that they are doing well in the industry. They want to show that their financial statements are okay. Those ones are actually factors that are beyond internal control systems. So, like now fraudulent reporting. You want to show like that so that you can be seen as a competitive firm. So that is one of them. Another one, management competencies and expertise. Management competencies and expertise. So basically, the skills within the management team, they have nothing to do with the internal control system. If they made an error from their side because of lack of knowledge or lack of skill, we can't blame internal control system. So management expertise, management skills or competencies, management competencies and expertise. Management competencies and expertise that can also cause inherent risk because they will do things that are shoddy, just like customer service, for example. You don't know how to do things. So the controls are there and you have procedure manual, but you're doing the wrong thing because you don't have the knowledge. So in that case, we are saying inherent risks are the risks that you cannot blame weaknesses in the internal control systems. Even if it is an error, that error occurred as a result of factors that are far from internal control systems. That even if you have the internal control system, they can still take place. So those are examples. Any other? Management wrangles, yes. That can also be one of the management wrangles. Management wrangles. Those are beyond internal control system. Whenever management starts fighting or they are disagreeing, you can't come and state and start blaming internal control systems. Another one. Let me see what you've suggested. So we have other issues like pressure from directors. We have seen competition. There could be pressure from competitors. Then we also have pressure on management by directors. Pressure on management by directors or by directors or shareholders. You know, management can be pressed up. They can be told that if you don't perform well this time, unaenda nyumbani. You are the management, you are the finance manager, you are the maybe CEO, but you are being told that according to last year's report, you have to improve. If you don't perform well, then you're unaenda nyumbani. Lack of standard operation procedures. This one is lack of controls. This one is lack of controls. So these are causes of internal control risk. Lack of standard, because this one we can blame control. Part of the controls is policy manuals must be there, control operation manuals must be there. If they are not there, then we blame the weaknesses in control, meaning that hawajaweka strong controls. Ndio, control haijakuwa strong. So that one goes to controls. But pressure management, which control can you put there? Complicated accounts, yes. So we can talk about complexity of accounting systems or transactions, complexity of transactions. But then you can also talk about complexity brought about by technology. Technology inaweza kuja yenyewe wewe mwenyewe uelewi, client mwenyewe haelewi. You see, because of the changes in technology, you can write that one down there, changes in technology. Sometimes technology can be in a way that both of you don't understand what is being done. The client doesn't understand. You as the auditor, you also don't understand. Those are things that can cause inherent risk. We can't blame weaknesses in the internal control system. We can't say that the internal control systems are weak. So the one that Peter has given us, that one we blame internal control system. So I hope you've written that one. I'm trying to look at anything to do with the risk before we move on. At least now we know. So what are the factors that can increase inherent risk? Factors that can increase inherent risk. Factors that can increase inherent risk. The same ones that we have there. Changes in business, nature of business, technology, pressure, those ones. What about control risk? Let's now look at control risk. Control risk. Factors that increase control risk or causes control risk. Factors that causes control risk with internal control systems. Yes, so we can start with lack of Lack of standard procedures. Lack of procedures. The next one, you talked about weak internal control systems. Sasa, weak internal control system is very true. That is it. But now you're going to finish your point, utamaliza, because this one is like a summary of all those factors. We still have some like lack of segregation of duties. Whenever you don't have segregation of duties, those are factors that can cause lack of segregation of duties. Lack of segregation of duties. Any other? Lack of supervision. Those are internal control systems. Hata hii procedure manual, those are control systems. So if you put control system, utakuwa umemaliza points. So it is better you break them. Lack of trainings, yes. Lack of employee trainings. Trainings and development. Because watakuwa wanafanya tu vitu, they don't understand. The next one. Lack of authorization and approval procedures, yes. Write that, lack of authorization and approval procedures. This is where documents are being approved without reviews. Things are being approved without reviews or approved by wrong people. Mtu ana authorize to because anakuamini. And I know at your place of work, maybe you've seen something like this. The senior manager trusts you in such a way that he can actually just approve without checking very well. That is actually causing failure in internal controls. That kind of trust where you can just approve. Another one, lack of verification of transactions, like reconciliations, you don't verify transactions, how they happened, the source documents, lack of verification. Lack of approval, let me write that, lack of authorization. And approval. Reviews. What is important here is that during the time, at the time you're doing approval, either there is no procedure to be followed or you don't review. So you have to be very specific to the matter when you're talking about this, because these are controls. Now, when they are failing, in case you are asked about examples of control, they are these ones. These are the examples of control. Now, lack of them are the failures. So we know that one of the control is that you should be having approval and authorization procedures. Now, lack of that procedure is failure in internal controls. So lack of verification also, verification, where there is no verification of transaction. When you can't verify transactions, like reconciliation, for example, in a bank, after every day, you should be able to print all the transactions reports and then you verify them. Now, if you don't do that, you don't reconcile, then that is also causing a problem. That also causes a problem. Other areas is where we don't have policies, manuals in terms of recruitment. We don't recruit people according to the right procedures. You don't bring on board qualified people. That is also causing control issues. Unaleta mtu juu unajuana na yeye, but not because he's competent. So if you don't do competency-based recruitment, that also causes that. And even on procurement policies, if they are not being followed, you select suppliers because of the way you know each other, that also causes that. So you can even end up paying, for example, if you bring your wife to be the one supplying, you can pay her the first thing even before paying salaries, because you want to favor this particular person. But obviously, you know very well that you're supposed to pay salaries, then you pay suppliers. So such kind of favors can come in. So let me go to another area, risk-based audit. Or is there any question? We looked at inherent, we looked at that. On the other side of control of detection risk, how can we reduce detection risk? Let me look at that before we finish on that. Detection risk. Causes of detection risk, or how to reduce detection risk. We know causes of detection risk, the same things that causes inherent risk. Lack of planning, lack of training, incompetencies, those are the same things. So how can we reduce it? Detection risk. How do you reduce detection risk? Training, quality control procedures, reviews, skill staffs, employing skill staffs, proper understanding of engagement responsibility, understanding of responsibilities, audit responsibilities, understanding of responsibility. If you don't understand the responsibility, then you can actually fail to detect some risk because you didn't know it is your responsibility to detect such. Others, detection risk, you can also reduce it by employing a higher degree of substantive test, You can reduce it by doing a lot of substantive tests, especially where you realize that control has a problem. You perform a lot of substantive test recalculations so that you can be able to identify where the errors are. Sasa, then also maybe rigorous audit procedures. We are saying that you need to use appropriate audit procedures. You need to use the rigorous audit procedures. Rigorous audit procedures. Those ones will also help you reduce detection risk, or at least you'll be able to detect. So what are some of the quality control procedures in a company? This is something that they can bring in exam. What are the quality control procedures that you can have or you ensure in a firm, at the firm level? Quality control procedures. Quality control procedures. Now, according to IASB, that is IASB, this is about International Auditing and Assurance Standards Board. They are actually ensuring that they bring us the standards that we're supposed to use during audit. This is a board. This is a board formed by a group called IFAC. IFAC is the International Federation of Accountants. It is a community of accountants. IFAC, International Federation of Accounting Community, Accountants Community or Accounting Community, Accountants Community. This is a group of accountants. They have a board that is called IASB. This is the board that comes up with the standard that we use for auditing. Like, for example, we talk about ISA standards. They are the ones who come up with it. But they are saying that quality of audit is very important. So they come up with another control that is called ICQS. That is International Quality Control Standards. I think, yes. International Quality Control Standards, that is ICQS, that help us to actually ensure that we have quality controls. So in exam, they can ask you at the farm level, what are some of the quality control procedures that should be put in place in a so that at least the quality of the report that you're giving is of high standard. Sasa, we are talking about that standard that is called ICQS. Or I think ICQS or IQSC, IQCS, International Quality Control Standards. I don't know, but it's something like that. We'll be able to verify. What is important is about international quality control procedures. So, quality control procedures. Quality control procedures. It is IQCS. Thank you very much. International Quality Control Procedures. Standards. International Quality Control Standards. Yes. IQCS. Thank you very much. Now, one of them is the review. At the farm level, you can control the quality of the report. We are basically saying these are quality control procedures. They are procedures that you put in place so that the audit report that you're going to give is of a high quality. So, what are some of the things that you need to do? Number one, review, proper review. Number two, supervision. Number three, for us to have quality report. Number three, we need to have trainings. Number four, what are some of the controls that you think can be put in place to ensure quality in a farm, at the farm level? They can ask you at the farm level, not at the client side. The client side, we have policies, and the client, yes, skill staffs. Employing skill staffs. We are talking about on the farm level. This is where you need the quality control on the audit report. But then we have setting up quality control standards, yes. Control standards. Set up standards. That is nice. Thank you very much. At the farm level, you can have your own standard on how you do things. Like every audit firm, they have the way you are supposed to present and even design the report. Those are their standards of ensuring quality report. Hadi usipofanya, they will always come. So those are some of the things that you need to do to ensure quality report. So, okay. So at the farm level, those ones, but on the client side, we also have other control measures on the client side. On the client side, what are the controls on the client side? Controls on the farm side are these ones, but in terms of the quality. Now, internal control on the client side, on the client side also needs some controls. What are the controls that you need to put to ensure internal controls are in place? Internal controls. Pale sasa tunaziita internal control, not quality control. Quality control is on the client side, on the auditor side, the auditor's company, quality control. On the client side, it is internal controls. Client side. So ICS, examples of ICS, examples of internal controls, examples of internal controls. So we say that definition, internal controls are procedures. They are procedures and policies that are put in place. They are procedures and policies that a company or business needs to put in place to ensure that they meet the main objective. And of course, the main objective of every company is not to make loss. The main objective is to make profit and reduce risk. Those risks are the ones that we talked about, the reputational risk, those business risks, right? Now, if those are the main objective, then what are some of the examples of internal control systems? Examples of internal control systems. Number one, authorization and approval procedures. Approval and authorization. Number 2, we have supervision. Number 3, we have segregation of duties. Number 4, we have policies and procedure manual. From the business side, they need to ensure that these ones are there. These are the things that will help them to have a strong internal control system. There must be people who approves or authorize anything. There should be a supervisor. There should be segregation of duties. Si ati mtu mmoja ndiye anafanya kila kitu. At least tunajua huyu anafanya hii, huyu anafanya hii. Sasa, then we have policies and procedure manual. Thank you very much, Juliet. Segregation of duties. Now, those are examples of internal control procedures that we need to put in place. Let's go to, I think I've exhausted that particular area. I've exhausted that particular area of audit risk. Let's go to what is called risk-based audit. This is the last area we're looking at. This is the last area we're looking at, and then we stop from there. We'll pick up risk-based audit. So we are saying, normally the audit function is something that is quite complicated and it has a lot of risk. Remember, you are being told to go and audit a company. You're going there to audit for 3 days. The company that you are auditing, the transactions have been happening throughout the year. And you're being told to go and check those transactions within 3 days. Now, wamefanya throughout the year, wakamaliza. Do you think that 3 days is enough? 3 days are not enough, yes. Hiyo ni kidogo sana. So that is why now, as an auditor, you need to focus on areas of high risk. You should do risk assessment, identify areas that you can focus on. Those are the areas of high risk. So that is what we call risk-based audit. You audit well based on the areas of high risk. That is what we mean by risk-based audit. So let's look at some of the reasons for risk-based audit. Why do we do risk-based audit? Reasons for risk-based audit. Reasons for risk-based audit. Why do we do it? Can somebody tell me? Because of time limit, we don't have enough time, so we want to save time by focusing on areas of high risk. Time limitation. Still, you only have 3 days. You're not there forever. So time limitation. Number 2, we are doing risk-based audit so that you can understand the areas of high risk. So to enhance understanding of risk level. To enhance understanding of risk level. What else do you think can make you do risk-based audit? Why do you want to focus on areas of high risk? To reduce the audit risk so that at least, si ati umesahau kuangalia compliance, umesahau kuangalia KRA portal, umesahau kuangalia payroll. No. You focus on areas that you think of high risk so that at least when you're giving your report as an auditor, you are not exposed to what is called audit risk. You did manage to apply the right audit procedure so that you can be able to identify errors or fraud. You know, you apply, these are now the audit procedures. You first analyze, identify area of high risk, you focus on those particular areas. That is the technique or procedure that you're using so that you can reduce the audit risk. Then you reduce the chances of you giving a wrong report. Reduce audit risk. That is why you are focusing on areas of high risk, so that at the end of the day, you don't give a bad report. Any other thing that you want to give me? We are almost finishing. Better use of resources, better allocation of resources. Of course, resources includes human being. So you allocate people only areas that are most concerned. That is another one. Any other? What else can make you do risk-based audit? I think that is the last area. That is the last area that we look at. Save on cost, yes. Save on cost. Let's stop from there. It has been nice having you guys around. So